Hello everyone. Thanks for attending tonight. Hopefully you can all hear me. I'm a bit of a newbie to the webinar process. We've got 56 or 59 out of 160 attendees online at the moment. So, but I'm a bit of a stickler for time, so I think I'll progress and get on with the webinar. Look, the procedure for tonight's webinar follows. I'm going to introduce you to the webinar platform and how to interact within the webinar. I'm going to introduce you to the MLA More Beef from Pastures program. Then I'm going to deliver the presentation, and from there the webinar will run for approximately 30 minutes, after which we'll open it up for questions. I've also got on the line David Brown, who is my colleague, who's an organiser. I'm relying on him to tell me if he can't hear me, and so he might interject every now and again. But at the moment, I'm hoping you all can hear me, and we'll see where we get to. So just provide me some latitude, because I am a bit of a Luddite, and I'm also in a reasonably dodgy Telstra zone, like probably a lot of you. So if reception drops for any reason, I'll aim to get back up as quickly as possible using alternative means. I'm hoping that's going to be a low probability event. But what I'm going to do is mute everyone throughout the course of the webinar, just to stop excess background noise. It gives a lot of feedback. If you want to ask a question, there's actually a chat box down the bottom. So if someone can just type a message letting me know that they can hear me, that would be fantastic in that chat box, because it will indicate that at least I'm not talking to myself, and that other of you can actually hear me. So if anyone can start with that, fantastic, that's great. Someone's already responded. So if you wish to ask a question, just type it in that chat box. If you can't hear us, there's an audio tab in the control panel. If you then press on the sound check button, it'll help you set up your audio. Throughout the webinar, I might ask you some questions in the form of polls. These are quick and easy. You just click on the response, and that's the way it should come through. We aim to finish by around 8 p.m, but question time may run past that time. If you wish to leave before questions are finished, you're welcome. Just exit the webinar and answer the short survey that pops up before you go. So I've got no one, I've only got one person who has responded to me. I just want to know that, can someone else type a message just to let me know that they can hear me out there, please? Because I've only got a response from my colleague David Brown, and I'm just concerned that not everyone can hear me. Everyone, okay, now I've got it. Great, thank you. There's a questions pane as well. Everyone's using the questions pane. That's fantastic. Thank you. You've allayed my fears, and you've given me some confidence in the platform, so thanks very much. Everyone's letting me know they can hear me through that questions pane rather than the chat pane. That's great. Either or, I know that you can hear me, so that's the main thing. Terrific. All right. So look, I've been through the procedure. I'll get on to really what we're going to talk about. My name's John Francis. I'm a consultant and director of Home Sackett. We're a consultancy firm based in Wagga Wagga in southern New South Wales, and we're focused on farm profitability and productivity. So we take an evidence-based approach to problem solving, and we try and base it on science and benchmarking data, and that provides the basis of our recommendations for improving farm profitability. Our benchmarking data sort of covers those data points in the southern or the southeastern part of Australia that you can see on the screen there. That screenshot is actually of the participants in this webinar. So we've got some from Northern Australia, and I just want to put the caveat to you, Northern Australians, if you're online now, and there's one from abroad I noticed as well, just to understand that whilst a lot of what I deliver tonight will be principles-based, there will still be some stuff that you need to put in the context of your own systems and that may not be that applicable. The other part of my role is that I'm the New South Wales State Coordinator of the MLA-funded More Beef from Pastures program, and that program's about achieving economically and environmentally sustainable increases in kilograms of beef produced per hectare, and that's really about the optimal management of the feed base. Look, the reason you were asked the registration questions regarding the scale of your business and the reason you'll be provided with an exit survey is that MLA wants to ensure that your funds are being well invested and that your needs are being met as producers and co-contributors to the investment. So that information is always treated with confidentiality, and in the post-survey response there's an opportunity for you guys to give us feedback on what follow-up events may meet your needs. And also if as a New South Welshman or those New South Welshman participants, if you've got ideas for events, then feel free to ring me and discuss, and that could be workshops, field days, anything that may add value to your beef production. Okay, we understand that your time's important, so I'm going to try and finish this on time, although that could be a challenge just given the technology and my newness to it. All right, so tonight's webinar is fully funded by the MLA More Beef from Pastures program, and the aim of these webinars is really to give you a taste of the type of information that's available through that program. Much of the information is going to be available in more detail in follow-up events, and the aim of those is to really improve knowledge and skills and to ultimately change practices for the better. This slide's just showing a screenshot of the More Beef from Pastures online manual. The manual consists of about 7 modules, each of which is highlighted in that green banner up the top. This presentation fits into the setting directions module, and this is a screenshot again of the setting directions module of that manual, and there's a whole lot of great information on that website, so I'd encourage you to use it. This module is largely about assessing the current position, establishing your business goals and understanding the options for improvement. The other part is this cost of production tool. It's just one of the many tools that's available in the manual. You can access that directly from the manual, and there's links to this tool. The cost of production tool can be used to establish and explore the same issues on your own farm as I'll be delivering in this webinar tonight. Okay, so there's 2 parts to my presentation tonight. The first is what are the messages that we've learnt from the lamb industry over the last little while, given beef prices are finally doing something that might marginally mimic lamb. And the second part is what's the new profit regime going to look like if the stories the price analysts are giving us are actually correct. So if I tackle the first one first, this graph is a graph comparing lamb prices and beef prices. The data comes from our benchmarking database. It's price received on the left-hand axis in dollars per kilo of dressed weight lamb and dollars per kilo of live weight beef. So you would expect to see a difference between those 2 lines because one's live weight and one's dress weight. Sorry, I'm in the flight path here so you can hear the plane going over. And the data is actually a rolling 5-year average. So that 2002 is actually 2002 and the average of 2002 and the preceding 4 years. So each one of those data points is 5 years worth of data on a rolling 5-year average basis. And what you see here is lamb prices that have increased at a compounding rate of growth at around 5.3%, while at the same time beef producers have increased at only 1.9% compounding over that same year period. Now, I've just got to note that our benchmarking data set ends a year prematurely relative to what actually happened. So what we're seeing is a lag in what's actually happened in real time in beef. And the other thing is you need to remember that these are 5-year average, so you won't see a rapid increase, as rapid increase as you would on an annual sort of basis. Look, what's changed? I guess what I've done here is just put up the MLA Eastern Young Cattle Indicator prices. These are sourced from the MLA, and what we've got is different years representing, or different colours representing different lines. But the thing I take from this graph is these preceding years, the 2012, 13 and 14 were relatively flat lines, sitting around that 350 cents per kilo dress weight. And then if you look at 2015, you've got a rapid upward trajectory. And I'm sure a lot of you are noting the downward trajectory currently. And whilst it's a downward trajectory, it still does show that those prices are well and above what we've seen in the past. But I don't really want to dwell on that too much because I'm not a price analyst and I'm not a commodities analyst. I'm really here to give you the messages from what happened with lamb. I've got some questions up here. What I'll do is I'll try and answer those as I go along. Look, the reason, one of the questions at the moment is why dress weight for lambs and live weight for cattle? Look, the key reason for that is that's what we talk. We tend to talk dress weight for lamb and we tend to talk live weight for cattle. So that's the only reason. We could have changed it based on assumption of dressing weight, but we tend to talk live weight and cattle. Okay, so whilst we've looked at prices, I'm now showing you the cost of production in dollars per kilo dress weight for lamb and dollars per kilo, which is the orange line, and dollars per kilo of live weight beef. Now, the interesting thing I see about this is that prime lamb enterprises have seen an increase in cost of production at a compounding rate of growth of 6.4%. So compare that with beef enterprises where gains of only 2% compounding have occurred in that cost of production. So which of these enterprises is on top of the game? Well, you'd have to say from that, remembering that this is cost of production graph, that it's beef that's actually been on top of its game and lamb hasn't been on top of its game. So that suggests that beef enterprises have managed to contain cost of production while lamb enterprises have shifted the focus away from margins and onto production. So look, the key message from this graph in my view is that if you don't focus on the right things when prices are on the increase, it's very easy for your cost of production to increase. Okay, so are lamb costs out of control? What I've done in this slide is presented total expenses in dollars per DSE on the left-hand axis, running from $0 to $40, with the orange line being lamb and the blue line being beef. Still 5-year rolling average, yes. And I'm getting questions and I'm trying to answer those as I go along as well as presenting. So I might have to come back to some of your questions later on because multitasking isn't my strong suit. I'm flat out breathing and talking at the same time. So look, you'll always see a difference in expenses between lamb and beef because lamb or sheep enterprises tend to be more labour intensive. They're more labour intensive because you've got to shear and crutch them and handle them more regularly than you do beef. So there will always be greater labour costs and greater expenditure on lamb enterprises. But what we can see there is the total expenses which take into account both the enterprise expenses, which are those costs directly associated with the operation of the enterprise, such as animal health and selling costs, and the overhead expenses, and those are the costs of doing business. So they're the things like administration costs, wages, depreciation, utility costs, and rates and rents. And in this data set, financing and leasing costs are not included in those total expenses, and they're incurred after the profit line. So they're below the line expenses. And the slide shows that the total expenses have increased at a rate of around 4% compounding per annum in lamb, which is double the rate of what they're occurring at in beef. And if we break that down further, the core area where those costs are increasing in lamb enterprises are labour and labour-related expenses. So when I'm talking about those, I'm really talking about things like vehicle expenses, depreciation, fuel. Anywhere you've got to have a labour unit, you've got to have vehicles for that labour unit as well. The other areas that have increased are animal health and pasture expenses. And if you think about it, the lamb industry has been very focused on intensifying production through fertility. So it appears that the labour costs associated with that additional production has been very high. So while additional production leading to additional income may have generated the majority, may have been generated, so that I guess that additional production is great, but it can't come at any cost, and it appears that the labour cost is eroding any of those benefits, or a large part of those benefits that may have been seen at the income level. The rate of increase in pasture costs in lamb enterprises has been 6.8% compared with 3.3% compounding in beef. Again, this is a focus on production, and it's not necessarily a bad thing. It's just that if these focuses on production, if the return on investment isn't high, then it tends not to flow through to the profit line. And we'll talk about that in another upcoming webinar about investment in pasture improvement, and whether it's making you or breaking you. And the final area where costs have increased in lamb is animal health costs, where they've increased at a rate of about 5.6% per annum versus 3% for beef. And I mean, I think about that, the thing I take from that is that it's very easy when prices are on the increase to throw in another mineral or another vitamin, but if it doesn't add any marginal benefit and it's only adding marginal cost, or the marginal cost exceeds the marginal benefit, then really is it adding any value? And I think the beauty of beef enterprises from our data, or what they've done well, is really retained their ability to contain prices, to contain costs rather, because prices haven't been high. Okay, look, I think the key message, I guess, from this slide is that, you know, make sure that you're focusing not just on increasing production, but on increasing production while maintaining the margin. And that means focusing first on the low-hanging fruit, or the high margin gains, and these are the gains where the marginal production benefits are high but the costs are low. And if you think about nearly in every enterprise that we've got, that's all about feed utilisation, and it's usually coming from improved systems and optimum stocking rates. So they're the areas where you tend to generate the best returns on investment. In terms of production, it has been slow gains from both. What I'm showing here is production in kilograms of either lamb, dress weight, or live weight beef per hectare per 100 mils. Now, it's the other component. It's not cost of production is not only about your cost, it's about the costs relative to the level of production that you generate. And so that it's an important part of the cost of production equation. And the most profitable livestock producers, regardless of enterprise, tend to drive down their cost of production not only through a disciplined cost structure, but also by managing plenty of productive units per hectare, and that spreads the overhead cost structure over a greater number of productive units, which lowers the cost per productive unit. So the reason we're looking at this in kilos of per hectare per 100 mils is that accounting for rainfall, while it's not a flawless methodology, it does allow for comparisons of production across a greater range of geographical locations. Now that seesawing effect that you can see on this graph is largely a function of rainfall rather than production, and that comes from the location of where that data is captured. It's likely that the lack of rainfall in the drought years, 2006 to 2008, has actually pushed that production in terms of kilos per hectare per 100 mils up, because the denominator has effectively shrunk, and the downward trajectory in the very wet years is a function of having a fair bit of rain. And so that is having an influence. But the overall annual rate of production increase is 1% for lamb and 0.3% on a rolling 5-year average for beef enterprises in that. Now that's an average of all our data. So look, the key messages I take from the comparison with the lamb industry is, don't take your eye off the prize. And the prize is the margin. That's the bit that you get to keep. Well, you know, you give some of it to the government and some of it to your financier, but the remainder you get to keep. Look, profits don't increase at the same rate that prices increase. And so, you know, that doesn't mean that, I guess it's really because changes in production and cost also influence the bottom line. Intensity of production can come at a high labour cost. So that doesn't mean you shouldn't pursue it, but really what it does mean is that you need to investigate the marginal cost of the additional production. And now might be a great time to chase that additional production, because you still can generate, with high prices and high get-in prices, good returns on investment if you're coming from a moderate to low base. And the final thing I take from that is keep an eye on labour-related expenses, pasture costs and animal health costs, as those are those areas that blew out in the lamb enterprises. Okay, I'm going to get on to the next part of this presentation, which is really about how much more profit will you generate. And in order to do this, I've really looked at some old pricing relative to new pricing, and I'll establish what I mean by that. So in order to establish how much more profit's going to be generated relative from the new prices relative to the old prices, and I put those in inverted commas, we've looked at two likely outcomes based on some home sack farm benchmarking information. What I've done is broken the prices into pre-2015 and post-2015, and the post-2015 is really considering that spike that we saw in the former graph of the Eastern Young Cattle Indicator, which considers the spring and summer selling season of this year, later on this year and into 2016. What I've done is modelled two self-replacing cow herds in a 700 millimetre rainfall zone, and they're running on 730 hectares. So one's based on the productivity and financial performance of a really profitable set of beef producers that we've dragged out of the database, and they've got good performance over a series of 5 years. In order to get into that most profitable 9 producers, they had to have very good performance on a per head basis or per DSE basis, and very good on a per hectare basis as well. So, and they had to be consistently high achievers. The key productivity difference between the most profitable and the average is really feed utilisation, and that's measured in our benchmarking by stocking rate and some production measures as well, kilos of beef per hectare. So the average annual stocking rate of the most profitable is 2.4 DSEs per hectare per 100 mils of rainfall. So I've used that in the modelling, and it's 1.7 DSEs per hectare per 100 mils of rainfall. And so that relative difference is a difference of 41% between those two cohorts. So it's pretty significant. At a whole farm level, that equates to a 600 cow system or 12,000 DSEs running on that 730 hectares for the top producers, relative to 425 cows in a self-replacing system selling feeder steers for the average. And those differences and the reason that they matter will be discussed further in the webinar on the 27th of October. Okay, so how much more profit? I was just going to quickly show you the assumptions for that modelling, and on the left-hand axis is price in dollars per kilo live weight. My assumption is that pre-2015 the price for steers was $2, and the current price, as I looked this morning, the last weekly, and it's on a downward trajectory at the moment, but stick with me for the outcome of this, because it gives you some perspective on how good the pricing is. So steers have increased from $2 to $2.75 in this analysis, which is a 40% increase. Heifers have gone from a 25-cent disparity to steers of $1.75 up to a 15-cent disparity based on the last weekly report. Steers, incidentally, generate about 50% of gross income, roughly. Heifers 25%, and the final part is cows, which are 50%. So we've got a fair few heifers still coming into the system as well, and cows have increased from sort of $1.30 or thereabouts up to $2. Now that gave a herd average of roughly, I think it was about $1.75 versus over $2.50 at the moment. So that's the background assumptions for the changes in profit that I'll demonstrate now. So this graph shows the change in profit as a result of the increases of in prices on average of 46%, assuming that that's what happens over the next few years. Now I'm assuming that the fundamentals that the analysts have told us are actually real and that they are strong. They do present a convincing case, at least for the next few years. So I hope they're right for us, because it is beef has done it pretty tough relative to the other enterprises. The underlying assumption is that the same cost structure as was achieved pre-2015 will be achieved post-2015, so that you won't go the way that lamb has, if you like. So if we just take the pre-2015, the most profitable, which is these guys on the left, the blue is the pre-2015 profit, which sat at $17.20 per DSE. That consisted of income of $35 per DSE, enterprise expenses of $6 per DSE, and overhead expenses of $12 per DSE. As prices increase, profits in that case nearly double to $33.54 per DSE, which represents a relative increase in profits of around 95%. If you do the same thing to the average group, you move profits from $11.73 per DSE, which consisted of an income of $34.90. So the key message there is the difference that you see between the average and the most profitable is not driven by income, it's driven a fair bit by costs. Their enterprise expenses were only marginally higher at $6.70, but their overhead expenses were $16.40 relative to $12 in that top 20%. So a lot of this is coming from additional productivity over the same overhead cost structure. So more labour efficiency, more productive units over the same overhead cost structure. And so total expenses of $23 versus $18 in the preceding example with the most profitable, and that's $5 per DSE more than the best. As prices increase for the average post-2015, basically you get an increase of a greater magnitude, 140%, relative to the most profitable. So in relative terms, there's actually more to gain from price increases from average performers than more profitable producers. In absolute terms, however, that's a different story, and I'll show you what I mean on the next graph. So what I've done on this graph is just taken this to a whole farm level, where what I'm doing is looking at the profit over 730 hectares, the whole farm profit, and it's that pre-2015 of the most profitable on the left-hand axis relative to the average. And you can see that profits moved from 200,000 or roughly $200,000, which is earnings before interest and tax. So there's still financier component and tax to come out of that, relative to, they're going to double as a function, provided costs are maintained and provided the productivity levels are maintained as well. So that's a pretty significant increase from a 46% increase in price, flows through to a doubling of profits for the most profitable producers, or the highest productivity producers. Now, when you look at what happens to the average, well, they get a better bang for their buck. They move from 100,000 in relative terms. So they move from $100,000 to roughly $240,000. So while that's a larger relative increase in profit than the best, it still only just surpasses the most profitable when they had the pre-2015 prices. So that suggests to me that there's still much to be gained from investing in improving productivity for the majority of the producer base. So I'm not saying don't take your profits and enjoy them. I guess the key message here from this slide to me is there is still scope for investing in further productivity gains, and there is still scope for maintaining, or there is an imperative to maintain your cost structure. Okay, so what are the key messages to this point? Look, I think there's a couple. The first is, I think that you can use that cost of production tool to establish your own margins. And I think it's really important that you do that year on year to understand whether your personal and business objectives are being met and can be met. I think the second message is, look, the prices will result, assuming the analysts are correct, the prices will result in some big wins, but there's still plenty of upside beyond taking a price increase, because that price increase is largely out of your control. I think there's still a number of things that you can do that are things that you can do within your control, but they are going to require investment. The final thing is, keep your eye on your costs, because it's easy for them to get out of control as prices increase. We don't want to go down the path of the lamb production phase, where we've seen those price increases not relate to the massive increases in profits that they should have, because there hasn't been that desire to maintain the margins, and there hasn't been the discipline, the business discipline, for things to be maintained in a pretty cohesive manner. So look, I'm going to leave it there. I'm just going to go back through these questions to assist you, or to at least try and answer some of those questions that you've got. If you've got any more questions, I'm more than happy to take them now. Once this show finishes, then you will be directed to a survey. If you want to leave now, that's fine, I understand, but love to have some questions. And I'm just going to scroll through and start to answer some of these questions. So I've missed the boat on some of these. Still a rolling 5-year average. Yes, the answer to that is all those graphs in the lamb versus beef were all on a rolling 5-year average basis. The next point someone has made here is reinvesting profit into capital expenditure. Beef hasn't had that opportunity. Yeah, look, that's right. Well, I'm not sure that actually is right, because if you look at the most profitable, they still have made reasonable margins, and they have been reinvesting into capital works. And I think where you're coming from there, that was raised by Nathan. I think where you may be coming from is you tend to achieve very high levels of labour efficiency or higher levels of labour efficiency with greater investment in some capital work. So look, I understand where you're coming from with that question, and it hasn't, whilst beef, I wouldn't say beef hasn't had that opportunity, I'd say it has probably made it harder. There's a few questions surrounding let us know when the slides and audio recording are available. Some people haven't been able to hear. We will make those available to you. I think we're going to post it and then we'll get back to you with both a PDF and some other information. Could you say that, I've got a question here from someone, could you say that when lamb producers made more money, they had spare cash to spend more on pasture? Well, look, I think that may well be right. The question is whether that investment in pasture is a wise investment, that is, it's going to generate them reasonable returns on investment, or whether it's been invested in without regard to the return on investment that necessarily could be generated from those pastures. I mean, my view on perennial pastures is they're great where there is a large marginal benefit to be achieved, but in many cases there is large investment in perennial pastures that don't necessarily generate the returns on investment that they need to, given the level of investment that's made. Where are we? David's just responded to a question there. For the next webinars, do we need to register for all of them, or will we automatically be registered now? Thanks for that question, Matt. David's just answered that question. We couldn't find a way that you could just register and repeat your registration process for all of them. I apologise for that, because we know that this is not the most desirable way, because you've got to enter the same information, but we couldn't find a way with this platform to achieve what we needed to. So apologies, Matt and others who want to register for those others, but we would love to have you in the others, and we'll be looking forward to seeing the feedback to see whether you're generating some value out of these. I think I've exhausted all the questions that are up there at the moment. Now, the only way you can ask a question is on the chat or the questions. Is there any, have I missed any? No. Here we go. Well, here we go. We've got a question. What will this do to land prices? What percentage of wealth creation comes from asset growth? What will this do to land prices? Yeah, look, that's a great question. I mean, I'd love to think that appreciation in land price was linked to rationality in the marketplace. My analysis suggests that that's not the case necessarily, but look, is it time for a boom? Look, it's mere speculation on my part, because beef is only one component, one enterprise. But you would have to think that that it does present fair opportunity. But don't forget, we're in a long-term play. And the second part of that question is, what percentage of wealth creation comes from asset growth? Look, another good question. It depends how good a producer you are, is the short answer to that. The best producers generate around 6% operating return and generate about 6% capital growth. And whilst the average generate around 3% operating return and 6% capital growth. So, you know, the percentage of your wealth creation depends on how good you are at what you do. Next question, any info on dollars spent for bull purchases per DSE or cow that the above average producers spend? This could be a cost that could easily blow out going forward. Look, we would have data there. I can't tell you what that is off the top of my head, but yes, you're right, that could be a cost that could easily blow out. And I guess, again, all I can say about that is really purchase bulls based on the level of genetic merit that they offer you. That doesn't mean you have to go for the most expensive bulls. In many cases, those most expensive bulls may not necessarily provide you with the most economic outcome. So, look, the short answer is that we will have data on that. I can't present it now, but I haven't been through to see whether average producers spent more per DSE or per cow relative to top producers. But yes, you're right, it's an important part of the business, as is getting genetics right. So that's a good question. Thank you for that. And we might need a webinar in itself on that one. Any other questions? I've still got 75 people online, and so I'm willing to take questions relating to that topic. Look, for those of you who aren't aware, there are a number of other topics that we're running through over the next few weeks. One of those is on Thursday, and that's about the tools for making tactical decisions about managing when you are at optimum stocking rates. Some of the other webinars we've got, I'm going to look at what those cohort of the most profitable producers did differently to the average. So what is it about them that does differentiate their system? And I might try and dig into that question regarding bull purchases if I can. And then we've got one on pastures and the benefits of or the cost-benefit analysis and the way to look at economics regarding pasture improvement. And then finally, we're looking at labour efficiency. So, and then there's a series of productivity or production-related or genetic-related webinars as well, which webinars and animal health stuff. So I've just got Gordon, making a point that he needs a link to register for future events. Gordon, thanks for that. Thanks for the reminder. We'll send everyone an email. What we will do is try to, if you go back onto our website, underneath the first webinar are the links that will take you to individual webinars, Gordon. So thanks for the question. If there are no other questions, I'm going to hang here for a few more minutes. If there's no other questions, I will call it quits. But look, I really appreciate everyone's input into tonight and hopefully making it successful. Hopefully you've got some value. Someone's just making a point here that the reception was a bit broken for them. Thanks, Bernie, for letting us know. We will work on that for the next series of webinars. So, look, thanks very much. We really appreciate everyone's feedback and questions. It does help to take the pressure off me a bit and talking at you. I know it's a bit of a one-way process, but if I'm handing over microphones, it just it makes the process a little difficult. So, thanks again for everyone's input, and we'll look forward to seeing you over the next few days. Thanks a lot. Bye now.